Hello, everyone. Welcome to the stream. Welcome to the Sunday night show. I've started a few minutes early as normal, just to set things up, get the sound right. Hello, Emily Trading. And welcome to our new members. Fantastic news. We've got Tomaz joining us as a YouTube member. Welcome, Tomaz. Nice to have you, mate. And we've also got Aziz Halani. So welcome to you as well, Aziz and Tomaz. Lovely for you to join us. And I'm very, very happy about that. So happy Sunday to you, Emily Trading. And welcome to everyone too. Right, now I'm just getting the sound set up. I'm still in a farmhouse in a remote location, but I'll be back. I'll be back in my office on Tuesday. This is a brief holiday, although it's turned out not to be a holiday because I've been trading Bitcoin hedging all last night and during the weekend. So lots of Bitcoin action. I'm a Bitcoin trader, so of course Bitcoin was moving and lots of opportunities as well. So we'll talk very strongly about crypto and Bitcoin, but of course in this session we're going to focus on other things and the other instruments that we trade. So please do let me know if you can hear me well and if the sound's good. Hello from Germany. I'm going to greet everyone. We've got 3 minutes before we start, so we can just ease into it. There's no rush. No rush at all. We've got the whole evening together. Good day, Sean. We're going to sort these trades out and find out what's going on in the markets, get you all on the right side of the markets. That's the main objective. First of all, let's get the right side. Good day, John. And once we've got the right side, we get the strategy going, and then we're ready. Damajan from Germany, lovely to see you. And Martin, of course, good day to you, mate. And Amon, lots of people here. That's fantastic. I love these shows. I love being here with the ArcisFX family. And I appreciate every single one of you. And if you're not a member here at YouTube, well, there's a few things you can do. This is a farm. There are mosquitoes around at this time of night. There's a few things you can do if you want to improve your trading and get more of the gen from ArcisFX, from me and Paul on the crypto side, and me on stocks, commodities, metals, energies, and some crypto as well. I trade a lot of crypto. So if you're interested in all of that, you can make sure that you just simply subscribe to the channel. Also, you can join the channel for a couple of bucks so you get the weekly members-only updates. But even better, and actually the best solution, is for you to join our private group. There are links below. In order to help you make that decision, click on one of the links. There's some free giveaways. Get hold of those. Watch those videos. Find out what it's all about and make your decision. I'm not going to talk about that again until the end, so there you go. So hello. I've got to get the blurb out of the way in the beginning. I don't like marketing my stuff, but I do realize that if I don't tell people what's going on, they don't know what to avail themselves of. So it's pretty important. Good day, John. Nice to see you. Emil, loads of folks in here. And Kirank, great to see you. Right, folks, we start in about 1 minute's time. We're going to get straight into these markets. And then I want you to put your questions up here in the chat while I'm busy. And make sure that you get them in early so that when I cycle around in about half an hour's time, we can answer those questions and get to them. I'm going to shrink my head down a little bit into the corner now. I never like this view. I like to see, maybe that's a better view. It's slightly distracting with me in the corner of the charts. Good day, Lucky. Always lovely to see you. So we'll start in literally, well, we're going to start right now, folks. So welcome to everyone here. It's lovely to have you once again. I've said hello to as many people as possible before we start. Darren, nice to see you. Thank you very much for that comment. I appreciate that. And okay, good. Chart setup and indicators used. I can do that, Kieran, but I've got videos on my channel already that's got all that info in it. Become a member of the YouTube channel, get hold of the private videos. And there you go. They're all in there already. And there are also some public videos on various indicators that I use, like moving averages, stochastic, how I draw fibs, how I draw trend lines, how I approach the entire market, candlestick trading, strategy, entries and exits. Loads of that stuff is on my YouTube channel already. You can get it for free. And if you haven't found it, go and have a look around. I think it's sort of segmented on the channel too, so that you can find out where things are. So, but I'll try and do that. I do try and do that as we go along. And Kiran, just stay tuned, because as we go through the markets and charts, I often talk about those sorts of things. All right, folks, let's get into it straight away. We're a little bit late. I always start these shows a little bit early because I don't like being late. Now, let's have a look. I don't want to spend too much time on currencies, just to say that the dollar is always important for whatever we're trading. And if you are trading the dollar, or not the dollar, if you're trading stocks or commodities or metals or Bitcoin, anything that you might want to trade is affected by the US dollar and the strength of the dollar against the basket of other currencies. But more importantly, how strong is the dollar against gold? How strong is it against Bitcoin, against property, against commodity prices, energy prices? How is the dollar doing against not really those ones, but more of the stable fixed assets like gold, potentially Bitcoin, although that's, you might say that's not all that stable right now, property, bonds, stocks, that sort of thing. How does the dollar do against those? Not very well. Look at the stock market, massive rallies. Gold, massive rallies, and the dollar is flooding out of banks into some of these assets as we see a devaluation of the dollar. So it's very important that we know what's going on with the dollar. And I'm going to quickly see this in literally a minute so we can get on to more important things. But here's the dollar. It reached its 200-day moving average. And Kieran, you want to know what I put on my charts. Let me start with the moving averages. First of all, I have the 20, the 50, the 100 and the 200 period moving averages, simple moving averages. I have them on every single one of my charts, every single chart, the 50, 100, 200, and the 20. And I use them for different reasons, but never for crossovers. I don't use moving average crossovers. I use them as support and resistance and for confirmation of other things. So everyone's on pause while I take a sip of my new flavor, Red Bull, and it's some sort of new flavor. I don't know what it is. It tastes a little bit like Fanta. So the dollar's moved up here and trying to top. We have not got through or defeated or closed above that spike high or the channel top, this Dixie Moab level. The jury's still out where the dollar can move down from here. I think it's kind of range. The dollar isn't going anywhere up or anywhere down very quickly in the near future. And so currency trading is a bit difficult. And if you actually look at the dollar on the longer term view, just this last couple of years, let's go back to, well, let's even just take this year, going back to the beginning of the year, around April, the dollar has literally crawled sideways across the page as other things have strengthened against it, meaning that the dollar is actually weakened against some of the major asset classes. So not much use for us there, but we are seeing some movements. Excuse me. We are seeing some movements on some of these pairs. Now, I've got two positions on. First of all, I've got a short position on the dollar yen, and this is a very interesting play. There's all sorts of talk again, and it pops up every now and then about the carry trade unwind. And what that means is that for many, many years now, people have borrowed Japanese yen in order to buy US assets. Not only US, but quite a lot of US assets, including tech stocks like NVIDIA, MSTR, some strategy, right? Strategy, I don't think it's that bad, by the way. We'll come back to strategy in a minute. And you're buying the tech stocks, buying the indices, buying gold, buying Bitcoin, with cheap Japanese yen, borrowing at almost zero or it was zero or below zero for a very long time. They have increased the interest rates slightly, but still very cheap. So borrowing Japanese yen currency and buying US stocks. Now, if the Japanese yen is not as cheap anymore, some of that money or all of it, a lot of it will flow back. It's happened many times, most recently last year. And it's called the Japanese carry trade unwind. And if that does happen, we'll see this moving down very fast. The problem is, and that's good for me because I'm short on this, there's my cluster of short positions near the top of the channel. And we took another short on Thursday. So it would be great for me if this moves down. And I think it is going to move down. I've got some question marks whether we could get higher. But do we have one of these red arrows? Each one of these three previous red arrows were dollar yen carry trade unwinds. And you can see how violent and dramatic they can be. And we're in that zone right now. If we see this, there is a danger that we could see a collapse in liquidity in the US, not quite a collapse, but a significant dent to it. And that will bring things like the NASDAQ, the S&P, crypto down as this unwind occurs. Now, I think they want to try and make this more controlled so that we don't see flash crashes in the NASDAQ, in the S&P, in the German 30, and some of these names already looking very, very fragile and very weak. I wouldn't say weak, I'd say fragile, tentative, dodgy at the top here, looking for direction. I mean, look at the NASDAQ. I'm long on all of these, by the way. I'm going to tell you why shortly, although I'm hedged I'm still long of mind. I've got a great position on both of these, but looking messy, looking toppy. We've reached the top of the channel. These markets want to move up into the end of the year. We want a Christmas Santa rally. Hedge funds want their bonuses paid. Investors want their returns for the year, particularly Bitcoin, which is down like 5% for the year, for example. So we enter at the end of the year. That's what these markets are meant to do, move up. And there are plenty of people that expect that, are prepared for it, and are investing in that sense. So we could move up, but very, very weirdly shaped and toppy at the moment. And some of it has got to do with this yen carry trade danger, unwind danger. You can see the euro yen moving down dramatically. I don't have the other yen pairs on here, but look, the Japanese yen index, which measures the strength of the Japanese yen, and as this moves up, the carry trade unwinds. Let's see what happened last time. There they are, moving up, moving up, moving up. As the carry trade unwound, let's see if there are any more further back. Not really, but there were a few around this time, and we're right at the bottom, not quite. We're below the 78.6. We're at the lower 200 Bollinger Band on the Japanese yen index. We haven't got to the bottom. We could get there, which would mean more rallies in the dollar yen. So yeah, tricky. But it's not just the yen that's being affected by all of this. It's also equities and, dare I say, crypto. Now, let's have a look at equities. And please, I will get to your questions if you're typing them up. I'm not watching closely because I've only got limited tech here on this farm, really in the middle of nowhere in Africa. So I don't have a lot of tech here. So I can't see everything, and I'm sort of flying blind. So type your questions up. Make sure that you put them in the comments. I will recycle back to them. It doesn't mean I'm ignoring you, or if you ask me something about what I'm saying right this minute, I might not reply. Now let's look at the NASDAQ. Right. Let me explain my positions. First of all, and I don't want to confuse people here. First of all, we've got a very, very long red up channel, which has been going on for best part of 3 years. Channel, we broke down through the top. First sign of danger with a Zweig breadth thrust rally out of that dip. This was the tariff dip, which drove the markets down across the board. Some of the currencies, commodity currencies too. We rallied back up, performed what's a very unusual Zweig breadth thrust reversal back into the channel, right back in between the two red lines. And we moved right back up to the top of the channel, just like that. I believe that these markets are moving higher, and I think we're going to eventually get up, higher than we are now. And I think we could go much, much higher as we enter into the end of the year, and as we see the assets gaining in strength, as we potentially see interest rate cuts. Don't worry about what everyone's saying. I think we're going to get a cut in December next month, and I think we'll probably get another one in early next year. And we might get even more than that if some of the Fed members have their way. So rate cuts. We're also seeing the end, and I'm not saying this, Jerome Powell said it himself, the end of quantitative tightening, which means the beginning of QE, quantitative easing, which means more money flow, more liquidity. If you look at the liquidity charts, we're seeing liquidity flowing in. And so we expect these markets to move up in line. They always do. And when liquidity drops off, the markets drop off. When interest rates rise, the markets tend to get the jitters. And so here we are. We've got everything set up. Year-end rally, hedge funds want their bonuses. I want my bonus. I want to make some profits by the end of the year. We've got some good profits on this already. I wouldn't mind a little bit more. And let me take a sip of juice, Red Bull. The flavor is, I don't know, it's hard to see in this light, tropical fruit or something. Right. So where could we go from here? Let's look at the current price action here on the NASDAQ, and we can look at the same on the S&P. It looks pretty similar. We fell down through this black line, which is a sort of inside trend line within the channel. We also fell down below the 20, below the 50, and below the 100-period moving average. Very bearish. You don't want to lose the 50 and the 20 together at the same time. It's not good. And you certainly don't want to lose the 100. We did bounce back above the 100 on Friday. But because we broke the 50 and because I had a bunch of long positions above that trend line, I had to hedge my entire position as we broke and closed below the 50. And so I locked in a reasonably sized position with quite a tight hedge, which means my loss on this trade, if I was to close the hedge, same on the S&P, my loss would be fairly minimal. But I want to make some profits on this trade. And so what I'll do, and I don't trust this market, I'm not saying that this is confirmed to be bullish, because we're below everything. We're below the 20, below the 50, below the trend line. We dip below the 100. We bounced a bit on Friday, but you might say, well, that's dead cat bounce. Look at Thursday's candle, the one that forced me to hedge. Massive, massive bearish candle, right the way through, slicing through. As they say, don't catch a falling knife. This is a hot knife through butter, right? Same as crypto, dropping through the key levels. And then I've got a parallel level here, a key level, these parallel black lines smashed right through those two. So there we go. Now, what could happen next? We might have to get back down to the bottom of the channel, at least. That's where the 200-day moving average is. That's where the all-time high, previous all-time high, double top, very important. Let's clone this blob and put it over here. So a double top at the previous all-time high, difficult to get below there, that's for sure. And it's where the 200-period moving average is. And it's very, very close to the bottom of this long-term red upward channel. So that level is secure, so, good support. Don't mean it's secure in that it will never break. I mean, it's secure as a support. It's solid. And so we may have to get back down there. It looks like that's the most reasonable sort of scenario. And at the same time, we expect that Bitcoin might have to get back down to its breakout level at around 75, 74. Very similar chart to this, as these instruments have been trading alongside each other. NASDAQ and Bitcoin seem to be in lockstep at the moment. So we don't want the NASDAQ, if you're a Bitcoin trader, which I am, more than a trader. I'm a Bitcoin maximal investor. I'm all in on Bitcoin. And so, if this drops down, Bitcoin has a good chance of moving down with it too, because they've been in lockstep, very high level of correlation, above 0.62 R squared. If you understand stats and the coefficients of correlation and that sort of thing, I don't expect you to know that, but there's a number called R squared, and if that gets above 0.5, there's a positive correlation. If it gets below 0.5, there's a negative correlation. We're about 0.65, I think, actually, between the NASDAQ and Bitcoin. So a strong-ish correlation. And if this moves down, Bitcoin will probably move down too. Noting that the bottom of the channel, the 200-period moving average, the green line, which was the double top all-time high breakout level, has not been retested. That's a serious concern if you're long. Now, I'm long and I'm hedged. So as I said, I hedged the entire lot. I've locked in my loss. I can't lose any more on this trade. I had someone in my private group, and you might be here, saying on Friday that they had neglected to hedge this trade when it crashed through the trend line, through the 50, through the 20, all that sort of thing. And they neglected to hedge the trade and had to take a loss when it dipped below the 100, dipped below that last swing low, dipped below it and bounced back up through it. And that was far enough for one of our members who didn't hedge and took the loss right at the bottom, at the lowest point on this chart. Don't wait for the lowest point to exit your trade at the largest loss. Try to hedge early, exit early. There are always occasions, time, plenty. Let me say that one more time, plenty of time to get back into the market at any time, in any direction that you choose, at a time of your choosing, not the market's choosing, not what someone said on YouTube's choosing, not some twit on Twitter's choosing, but at your choosing, at your time. There's always time to get back into the market. Don't wait for catastrophic losses. Take a small loss, step back, reevaluate, get straight back in if you want to. There's no problem with that. Take a 0.1% loss. And if you think that you shouldn't have got out and you should be right back in again, get back in. Or if you think that you should be in, but you didn't get in, get in. There's loads of time, and it doesn't matter whether the market moves a little bit one way or the other without you. There's no problem at all. Rather accept that you're not going to get the perfect entry than accepting that you're going to get the worst possible outcome when you take a loss. Please. It's just not rocket science. It's really simple. It's pretty simple. It's don't take large losses and take large wins. Let your swing trades run, cut your losses early. You've read this in every single textbook you've read, but of course, we don't, many of us, sometimes even me, tend to ignore and neglect that rule. Now let's go into the S&P. I'm long. My strategy is at the moment we get back to that orange arrow, if we get back there, and I'm not saying we will, the next target might be right down here at the 200 MA and that double top breakout that we spoke about earlier. And that's all the way down at 22.2. I like the 2s and the 8s. So 22.2, 222. Let's put all the 2s in a row. 2, 2, and another 3 2s and another 2 after that. That's where this market will probably be looking to, and those who are bearish in mind will have that quadruple 2 plus another 2 target in mind. And so we don't want that. We want this to hold here, not for the sake of NASDAQ only, but also for crypto. Crypto may be giving us a clue, though, that crypto moves on the weekends, the NASDAQ doesn't, and crypto we'll have a look at. It's quite interesting. And I've been watching a few videos on YouTube, as I do myself as well, like you're watching this one. I sometimes watch videos, and I've got some thoughts on crypto, which I'd like to share with you. I think we'll come back to that at the end. Now, the S&P, and we'll perhaps do the energies and the metals first, and then some of the softs and grains. Now, the S&P is not dissimilar to the NASDAQ. I have 3 long positions, all of them hedged with one short position. When we broke down through that 50-period moving average, just like the NASDAQ, we got to the 100-period moving average, and this order block, we didn't break that previous low on the S&P. That was the first clue that the NASDAQ might hold. We tagged it, bounced up violently on Friday on the S&P. So we didn't break the low, we bounced up. We actually performed almost a tweezer candle, not a tweezer, a piercing pattern reversal. A piercing pattern here, again, for those who are asking about trade methods and strategies and setups and technicals, a piercing pattern is when the price, we have a massive bearish candle like we did on Thursday, which forced me to hedge, massive bearish candle, followed by the next day making a fresh new low, in this case, only to the bottom of the range, perfect bounce out of that exact level, a new low on the following day. And then we want the candle on the following day. In other words, this candle on Friday, notice it's closed above the 100 as well, to close more than halfway up through the previous body of the bearish candle. We didn't achieve that. We didn't close more than halfway up that candle. In fact, you might even take it from the top of the candle. So we didn't, but we almost achieved a piercing pattern reversal. And I think that next move on the S&P is similar to the NASDAQ, all the way up here. My target, like Morgan Stanley and like Saxo Bank and Rabobank, my target is 7,000. Actually, mine's a bit more aggressive. They're going for 7.4-ish, something like that. I think we could get even higher, up to about 7.6, maybe even 7.5 to 7.6, 7.7 maybe on the S&P. That's a very bullish view. We're holding that level. I've got a line in the sand. It's absolutely perfect now, because I know that if we break down through that low, I will abandon my hedge and get short. Okay, so if I'm wrong on the long, the short must be broad or something along those lines. There's a right. If the long's wrong, the short might be smart or something like that. So I will get short. If we break that level and close beneath it on a daily basis, I will get short on the S&P, unhedge. I might hold the hedge. I might even hold the hedge, but just add an extra short. In other words, weighting my hedge to the short side. Same on the NASDAQ. I've also got a long position on the German 30, which I had hedged, similar to the S&P and the NASDAQ. We did a very similar thing, like the NASDAQ. We did break that level, but bounced and closed above it. I really like this pattern on the German 30. I bought the bottom of the range. I also bought the center of the range and the top of this moving average cluster, which it didn't hold at all. Very surprising. We just sliced through that ribbon of moving averages. That's the 20, 100, and 50, like it wasn't there. We also sliced through the 200 like it wasn't there, but only to the bottom of the range. It's not good. It's looking bearish, but I'm having a go on this. Not a big position, and I think we can get up through the top and eventually move higher. A lot's going to depend on the factors that affect the rest of the market. Basically, liquidity, what JP says, how many rate cuts there are, what Trump says, what the tariff story is all about, any other stuff that comes along, which may be positive or negative for the market, will affect them all together. I'm hoping mostly positive. I've also got names, positions on many of these names, but They're okay. I mean, they're not great, obviously, but I do want to talk specifically about MSTR. I'm still long on MSTR, and I want to quickly talk in 5. Let's make it 1 minute. What's going on with MSTR? MicroStrategy potentially is facing being delisted from one of the very large exchanges. I can't remember the details. I'm on holiday, folks. I haven't even read the details, but I did a quick summary of it in the last couple of hours since we just got back from on a long drive and we went to the beach and everything. So MSTR, is this going to be a major? First of all, is this priced in? Is there a major problem? Is there leverage involved? What's going on with crypto? Why are there big whales selling? Is there something weird going on? Why is the fear and greed index at the lowest it's ever been, not only on Bitcoin and crypto in general, but also on the NASDAQ? The NASDAQ's 5% from its all-time highs, and we've got a fear and greed at the lowest level ever. There's weird stuff going in the market, but I think a lot of it is being pumped up by uncertainty, by the government shutdown, by a lack of news flow, by the COT reports not coming out, all sorts of uncertainty. And certainly in crypto, there have been some whales and so on selling and readjustment of positioning. And then there's this big story about strategy and what might be done. Do they have to get rid of the Bitcoin, reallocate it, move it around, change what they're doing? It's a bit, it's really uncertain. I think that it may be a little bit overblown. I was watching a fantastic video. I posted it up in the members area. I'd like you to all watch it. And it was an interview with Anthony Scaramucci. You might not like the mooch very much. I kind of like a few of the things he says. He's a politician type, but he's also runs a hedge fund. And I'm interested in what he's got to say because he has some in the US government. He expressed just about an hour or two ago very positive views about Bitcoin. And in fact, I quote, and I'm going to read it from what he said in the video, which I posted up in the private group, which I'll try and read to you right now without disturbing this stream. But this is what he said. Now, here we go. And the idea is, the other idea is that people are using strategy as a hedge for Bitcoin. I've done this before. You will know if you're in the private group, we sold MicroStrategy when it was at its highs because we were long on strategy and Bitcoin, and we hedged, and strategy collapsed actually, and Bitcoin remained fairly stable. So people do it. And I've written, whales have used strategy as a Bitcoin hedge for ages. We did it when strategy was at the top, and it was one of our best trades of this year, if you remember. Yes, of course, we remember that. Now, I also wrote, ignore the Bitcoin YouTubers. They keep searching for reasons for the Bitcoin sell-off and for a solution to their FUD, F-U-D, fear, uncertainty, and doubt. And I've got it wrong, at least partially, perhaps for 3 or 4 times. The whales are selling. Bitcoin's over. This happened, that happened. There was a problem with there's institutional and regular scheduled selling by someone that we don't know about, or there's a glitch in Coinbase which is causing this. None of this seems to be really true, or fully true. It may be partially true. Anyway, it's probably wrong that strategy is about to go down the toilet. I don't think so. And there's a lot more sophisticated playing going on behind the scenes than any of us understand. And there's government and politics and the strategy for the US government in blockchain and crypto is all tied up with this. And basically, you can't have one company have it all. Okay, I think that's what's going on. I think they will. I don't know. I don't think it's as gloomy as we all think it is. Anyway, so will MSTR bounce? Now, having said all of that, let's see where we are. Now, I've got a lot of lines drawn up here, so I'm going to move one of these down to where we are currently trading and see what we're at. We're at the top of the ledge, of course. Everyone's looking at this level. Let's make it a big, thick purple line. We're at the top of this purple line ledge right here, and people are saying, well, it's all over. Strategy is doomed, and it's sold off so much. Look at where the highs were. We were selling these highs, by the way, and we got out in this zone down here. We sold several times, and then I started. We didn't buy actually for ages and ages. I think we even sold some of these highs, and then I started buying at around about $300. We're now down at 170. These are tiny positions at the top, adding slightly more size, and I've now hedged half of it, And I also took a loss on some of the size. So I've reduced size and I've hedged half of it. And I'm in a position now where if it does move down a bit further, I'm fine, I'm happy. But I don't want it to do that. And I want it to lead the way like it has done with Bitcoin. So we don't know how this is going to open up on Monday, tomorrow. We're going to talk about natural gas shortly. I'm sure there are loads of comments. So let's have a look. Well, anyway, I don't want to go on too much about this because there are a few things I want to talk about. I'll come back to Bitcoin here. But before we come back to that, I'm going to move on to energies now. Bitcoin, Ethereum, XRP, and Solana, all bouncing out. We got long on Friday on these three alts, Ethereum, XRP, and Solana. You can see my arrows down there below. Make a note, pause the video, look at my green arrows on each of those. That's where we got long. I'm going to be looking to add more long size to all of these, plus on Bitcoin. On Bitcoin, I got long at the green arrow over there, and I'm looking to add some more size to that. I should have done this on Friday. I added a little dribble to the long side this weekend, but not significant enough to even talk about. So these all look like they're bouncing. I see Ethereum is dripping down a bit as we're talking. These are all live now, folks, live charts. I think we can get a bit of a dip today, maybe back down to 83, maybe slightly lower on Bitcoin, and the rest will follow suit. And then I'm looking for an opportunity to buy. I think these may have reversed already. Now, we'll come back to that. Now, let's talk about natural gas. Because if I don't talk about natural gas, you'll all be sitting around. But the problem is, if I talk about natural gas right now, you'll all leave and not come back. And then the show will be over. So don't do that. Instead of leaving, make sure to click the like button and the subscribe button right now. Folks, we can't make these videos for you if you don't support the channel with likes, subscribes, and comments in the chat and in the discussion boxes below the video. If you don't do that, we won't get recognized by YouTube. We are already well recognized, but we want to keep that going. So make sure to do all that sort of thing. Now let's move along to natural gas. Stay with me. Here's natural gas on the continuous. Now, first of all, let's look at the bigger picture. Let's set the scene, so to speak. This is the futures chart, and I'm going to switch across to, this is my Black Bull futures chart, the broker that I trade at. Links below if you want to become a Black Bull trader, or on my website and trade the same broker as I do. But I'm going to switch this across to natural gas, not Bitcoin, at the NYMEX. And here it is here. And this is the day chart. Now, first thing that we need to notice is that we're nearing the end of this contract. And if I click on this green, purple, by the way, folks, if you use TradingView charts now have an 80% discount for the top, one of the top. I don't have quite the top tier level, but I've got the second one down. In other words, not the corporate one, but the professional traders one, which is 80% off today, 80. Go and get it. You'll save yourself $400 or something. I've just paid for mine. Paid $200 instead of $700, something like that. Or maybe it was instead of $800. Could have been $900. I didn't pay much. So go and get that TradingView Black Friday sale on. Now, this is natural gas on the day chart at the NYMEX, the Henry Hub price, Henry Hub. And this is where we are. We've moved up, big sharp move, very long way up. There's a big gap over here, and that's the rollover gap, right? So this is the current contract in this blob. Let me just sort of draw around over here. Folks, if you want to learn how to trade natural gas, if you like trading it, but you're not very good at it, or you're completely lost in your natural gas trading and you want to become better at it, come and join us in the private group. It's not expensive. And we do very, very, very well on natural gas. I'd hazard a guess that we are probably the top natural gas. It sounds arrogant, but I'm not saying with any arrogance at all. I think it's true that we are the top natural gas traders, at least on YouTube. We're not in the institutional world. I'm not in there anymore, but now I'm a YouTuber. I was in the institutional world. I ran a hedge fund. I worked for a big bank in Europe, and I've been trading for 30 years. So I know how these things work. Natural gas has now moved up to a very high level, and I think it needs to come back. Now, there's a couple of things we can look at here. That's the contract. First of all, the contract rollover is on Tuesday. That's not tomorrow, but the next day. Paul is, by the way, we don't only trade commodities and stocks and metals and all that sort of thing, but we trade a lot of crypto as well. And if you're not aware of it, Paul has joined us. Paul Pico has joined us in our group here at ArcisFX. He's joined our team, and he's one of the leading crypto experts. I'd encourage you, if you are a crypto trader, and I think if you're not, you should become one. I really strongly believe that. You should become interested in crypto if you're not already. Then we have a fantastic crypto, altcoin, and Bitcoin trader on our team. So check that out. There's loads of videos up already. Now, this is the current contract rolling over on Tuesday. So that's where we are. We're right at the top, very high level. Not to say we can't go higher. My view on natural gas is generally bullish up into the 5s, I think, and maybe into the 6s. I just read that there's maybe some severe cold weather coming next month. At the moment, it doesn't look too bad. It's a bit soft. I think we need a bit of a pullback. We need to gather some liquidity at lower levels for a surge into the end of the year. And of course, we got the cooling weather effect of it too. So that's natural gas. Now, what I want to do is go back to my black bull charts, and that is ngas.f. And this is now trading at $4.52. And I'm not trading the futures at the moment because of the rollover on Tuesday. Next week, once the rollover is complete, I don't want to get mixed up in the messiness of the rollover. So I trade the continuous in the week before the futures rollover. So we can go to the continuous chart. But just to say, on the futures, we're right at the top. This is about to roll over. I don't know how this will roll over. Also, it's Sunday night. And in a few hours' time, this market will open up and reveal to us what it thinks about the weather and the reports that came through on the weekend. And as it happens, it just looks a bit mixed, really. So it doesn't look particularly supportive right this minute. It could change in 5 minutes. We don't know. It could change before the market opens. We've still got 4.5, 5 hours until the natural gas, well, the markets open in general, and we'll see how the price opens up. So anything can happen. But I think at the moment, the way it stands, not only technically, but also because of the weather, I think we'll be okay. We may have a gap down on the weekend in a few hours' time. Now, this is the 4-hour chart at Pepperstone, where I trade the continuous in lieu of trading the futures in the last week before rollover. So this is what the continuous ETF looks like at Pepperstone. And look how we've moved up. We've barely retraced. And what I said on my video on Friday, you can go and check that out. I put that up on late on Friday to give you an inkling of what might happen in the coming days. And so go and check that out. But look how we traded up the trend line. This is a 4-hour chart. And along with that trend line, and actually even better, was the 20-period moving average, the green line here that sort of runs along the trend line, basically. And at some stage, and this was on the 13th of November, no, it wasn't. It was on the 14th, on a Friday. Friday, the Friday before last. We dropped through the trend line, we dropped through the 20 period, and we closed beneath it. We then bounced up to the underside of the trend line, a classic breakdown, retest, and then failure at the underside of the trend line. And we got down once again below the 20-period moving average. We only got down to the red line and this point of control, volume zone, which is the 50-period moving average, and bounced out of there with a bullish engulfing. And in fact, what I said to you earlier, the piercing pattern candle made a new low and got more than halfway up through the body of the previous candle. In this case, completely engulfed it and more. And then we broke up above the 20-period moving average, and we marched up towards the top or the underside of the same trend line that we have now broken. We're now below the trend line. Even though we moved up above the previous high, we're still below the trend line. And so that trend line is now still in charge. And you can see that we didn't quite get up to it for the second retest, but we tried. And then we made a few reversal candles, tried to get down, bounced off somewhere near the 20-period moving average again. And then the last 3 or 4 candles on Friday went sideways, with the very final candle, the penultimate candle, was bullish, actually making it even a new high. And then the ultimate final candle moving down. And actually more than halfway down through that previous bullish candle. It's not particularly bearish. It's bullish at the moment. But I think we'll find out in a few minutes' time whether we can move down. Now, let's see what lies below us. I've got some natural areas of target. And the first one is the 200-period moving average, this purple line, which is the most important support line on this 4-hour chart. And that will meet us up here where the red arrow gets to, this sort of order zone here at about 375, which is also the key level that I always trade off on natural gas. Whenever we get to 375, I like to, there's probably a trade of some sort. It's just a pivotal level, and we'll either bounce off it and go long or collapse down, retest from underneath and go short. But I think we'll try and head back there. There's a chance, however, that we could head even lower. And notice just below the 375 level, I should draw a line across there, really. Let's make a skinny little horizontal line at 375. So that's the first target. No, that's not skinny, is it? First target is over there. Let's make that black. Let's make it black. So first target there, but I think we could get a little lower. There's the 200 will meet us up there as well, by the way. If we get there, the 200 will rise as this time progresses. But I think we could get further down to that previous high. And also notice that in this zone here, there's no volume, zero volume in that little gap over there on the right-hand side. And so that was caused by a spurt up where there was no time for any liquidity to be built up. And so we have a gap. It's not shown on the candles very clearly, although there's a little gap there, tiny little gap. Let's zoom in. Tiny, tiny little gap has not been filled so far. I'm just looking at this gap above here. That was filled. All of them have been filled except for that one where the black line is. So, and that's at $3.50. And it's also shown on the left-hand side, on the right-hand side here, where there's a hole in the volume profile on the right-hand side. So we could get there. I think it's probably, if we get to 375, we'll probably give a go at 350. And then the idea is to bounce out of 375 or 350 and get long again on natural gas and look for this to move up all the way back up to where we're currently trading and some. And I think we get up to about $5 and maybe $6. So that's the kind of plan. I'm short already. We've got 2 positions on. I think we've only got 20% size. Maybe it's 25. It's not a big position, but it's sufficient. And bear in mind, it's a counter trend trade. I'm not bearish in mind on natural gas. I'm bullish. And so I'm not going to take a large short trade on a position which goes against the direction of play. The other thing I want to point out very quickly on this chart, at the same time that the price is moving up on the 4-hour, and for some of you, this might be the most compelling reason. For me, it's not. I'm not a big fan of oscillators. And, if you're going to use one, I think the RSI is good enough. It's the simplest one, easiest one, and probably the one that most people look at. You could use a stochastic, you could use a MACD, and you could use any variety of other oscillators. I'm not sure if, I think you can just type in, can you hear the hardy-dars? Yeah, oscillators. There are any sorts of oscillators here on TradingView. Don't forget to get your 80% discount on TradingView. Don't forget. Don't. It's a big saving. So yeah, divergence on the stochastic, very overbought over there, incredibly. In fact, it went into a weird shaped color and dropping all the time as the price moves up. That's called RSI divergence. This is a 14-period RSI standard. And RSI divergence often means that either the RSI is going to break out through the top of this trend line, most unlikely, or the trend or the price will drop down in the direction of the diverging RSI. And that's mostly what happens most of the time. Not always, but most of the time. And so that's the most likely scenario based on the RSI. RSI is not my favorite thing to look at, by the way. I have it there because many people like to look at it. And if I didn't put it there, someone would bring it up and say, hey, do you know there's RSI divergence? Yeah, I know there's RSI divergence, and I've got it on the chart. So energies, that's natural gas. I'm short, aiming for 375, 350 to reverse to get long for $5, maybe 550. Simple as that. And then WTI, I'm short. I'm not normally short on oil and gas at the same time. It's just the way it's worked out. We're short from the 50-period moving average. We tagged it 3 times, once, twice, and I've covered this in detail on my video whenever it was, last week. We tagged, sorry, I'm sitting in a very uncomfortable chair here in this farmhouse, and everything's starting to get sore. So we tagged it 3 times. One, tagged it. Second one, tagged it slightly lower. That's where we got short, big bearish rejection from there. And third time, we tagged it again. If you look at this on the 4-hour chart, we've got 2 waterfalls. People love it. Our chart looks even more fun. This is called a waterfall pattern. We get a massive move up, followed by the waterfall, which accelerates as we move down. Beautiful. Another one over here, massive move up, followed by tiny, bigger, and there we go. Straight through the market structure, smashing down. Waterfall number 1, waterfall number 2, and you might say not quite a waterfall, but waterfall number 3. Look at the mess at the bottom here. This is a bit dangerous. Double bottom, bouncing out of here at precisely $57. It's not a major support level. And I think we've got to get to 55 down here. Maybe it's slightly lower, 56. Okay, $1 further down. And then I think we'll break that level eventually and start moving into much, much deeper levels. I've eliminated all my lines from these charts, so I'm going to redraw them tomorrow, I suppose, when I get back to the office. Folks, I will be in the office tomorrow, not tomorrow, Tuesday, and I will be doing my videos and everything will be normal, back to normal. There won't be any weird, dark, shady videos and lighting. I've got to change this lighting. It's starting to look a bit weird and dark. Give me 1 second. It might look even worse now, but there you go. So yeah, so there's oil, and basically on the day chart, I think we can drop down through the support. We've got a triple bottom here, potentially. Not quite. That bottom is not as low as the previous ones, but you know, I think we're going to get back down there, back to 56, and then 55, and then eventually this descending pattern will eventually break through there. It's going to get messier and messier and choppier and choppier because we're forcing into fairly low prices right now. And the lower we get, the more resistance to the move down there will be, and this will become more difficult to manage. So it's going to get choppy and messy. As you can see, it's getting more and more, it's slowing down. Momentum's running out. I think we've still got more downside, but not an awful lot. I think we might get to 50. We might get to 48. We might get to 45 at a stretch, maybe something like that. But then I think we'll be looking to get back long on oil. And we'll start to look. I think there's a really good support level down here. Let's just put that in there. Let's use this as a start, right? Let's go for that level right there. And that's $52. I think if we get to 52, that's low enough for the moment. And we could bounce out of there. We're currently at 57. So we could, you know, we need that to move down a wee bit. Not a lot though, not an awful lot. So that's the day chart on WTI. Let's go back to, I'll leave it there like that. A couple of other things. CEG is another energy play, just out of interest. I'm long on this one too. Go and Google that out. You can check that out. Google it out. CEG, energy play. It's better with the light behind me, right? So you can, at least I don't look like some sort of weird glowing face in the dark. And then LIT, lithium, I want to get long on this one too. Just mentioning these while we're on this page. I want a deeper dip on lithium. Need to close some of these gaps. I think we could close these two gaps. First of all, I think we could get back down to 47. Yeah, about 47, maybe $45 on lithium. I want to get long on that one too. And uranium, I'm already long on uranium. This is one that tends to clear people out and really mess people about because it gets going. It really gets a wiggle on and gets everyone bullish and then, you know, collapses. It's done it many times and it keeps on doing it. But we've had a massive move up here on uranium. And of course, we need to have a build. We might even need to get a log scale in here at some point. Let's put that to a log scale. So yeah, big move up. I think we could probably come at least back to the 200-period moving average, about $36 to $38. But with a bit of luck, we could get all the way back to 33.5 and then bounce out of there. We have not retested that breakout level yet. Look at all the volume down there, and we've got very skinny volume up above where we're currently trading. So we might need to dip back into that volume to pick up some more gas. I mean, by gas, I mean energy, power. All right, now, yeah, so that's all of that. Now, we're slowly running out of time. Let's go through softs and grains, and then I'll get to the questions. Coffee, I don't have a lot on softs and grains. I've got a couple of plays, and we just exited one of them. That was coffee. This was a bit of a miracle. And, you know, I said on Twitter, on X, I posted this chart up, and I said, this was not designed. I wanted to get out the red line, and we got out at the red line. That was planned. But the moment we got out, it shot up from unbelievable $348 to close at $374 the moment we got out of this trade. And you know, I don't know the reasons for it. Some watch it. We got out right there. Let's move that across. We got out right there 15 minutes later. So literally got almost the bottom, actually, 350. 15 minutes later, we're at 358. 1 hour or 2 hours, hour and a half fiddling around, and then boom, up we go, eliminated that whole drop, the whole thing, and we closed with a positive bullish candle. Looks like that's going to keep moving up. So if you're short on that, you might want to consider hedging that when you get a chance. That's coffee. So pretty bullish there. And we got out with a bit of just pure luck, pure luck. Sometimes you just need luck. Even if you're a good trader, bad trader, intermediate trader, any sort of trader, luck always helps. Now, we're long on sugar. I'm just going to go through the plays that we're on. We're going to come back to cryptos, long on sugar from there, trying to get through the top of the channel. This looks good. I think we could get up to the black trend line on sugar. There's the point of control. First stop, 16, yeah, call it 1640. And that would be just under the trend line. We'll reevaluate at that point. We're currently at 1420. So potentially a good move up from there. And we got along a little bit lower at 12 something or 1350. Yeah, all right. Now, let's look at metals, and we'll come to cryptos in a minute. It's very difficult to cover all of these markets in 1 hour. I promise you, it's almost impossible. And so from next week onwards and going forward, we're going to try and split it up a bit. I'll be doing separate natural gas videos during the week. Just natural gas. Might combine it with oil, crude oil, but it'll be natural gas and oil, let's say, only in one specific video. And then we'll be covering maybe stocks and crypto and and the other stuff in other videos. So it's too much for one session, but we are getting back on track. And now that I'm not at Ola Prime anymore, there's plenty of time for me to get back into the swing of things. So so let me just say what's going on in gold. As I said on the last video, I think that gold has, well, it did what I thought it would do, right? I said we were down here, we were trading at this level, and I said we've got every chance of moving back up to the 78.6% fib to collect liquidity for a further move down to bring us back to the breakout triangle, this big red triangle in the center, which is an ascending triangle that we broke out of through. We've never looked back. We've not retested the breakout. And I said we'd have to get up to the 786 or thereabouts to collect the trapped liquidity at the top there, not retail traders, a lot of whales trapped up there too, in order for them to be released so that we can move down. Now, what happened? Well, we moved up, not quite, but come on, call me a liar for a few pennies. How close did we get to the 786? We rejected that zone in my blob. This blob was drawn weeks ago now, rejected in the blob. We didn't quite get to the top of it, which I thought we could, something like that, but we did. And we've moved down and we're plateauing above the 20-period moving average here on the day chart. So it looks quite negative. We're short. I'm not, excuse me, I'm not suggesting, and it's looking, it's quite well supported here at the 20. We've got that spike low there previous to that. I'm not suggesting we can't bounce out of here and keep moving up to a new all-time high, but, or at least a double top. But if we do get up to the double top and reject, fair enough, I'll probably still be short. I've only got a small position. If we get up higher to the underside of this trend line that we broke out of, that would be very similar to what we were talking about earlier, that you could get on any instrument back up to the underside of the trend line. Let me draw that in for you, and still be bearish. I'm going to use this line as the sort of example. I'll return it to where it is currently. So we could move up something like that to the underside of that trend line and then move down and still be bearish, still not be above the trend line. Let's get rid of this very sharp trend line. That's not helping anyone. So we could do something like that and still be bearish on gold. And I really don't know what's going to happen from here. It could do that, or we might move down. But ultimately, my target is moved back down to $3,500. I'll acquiesce the proposition that we might not get that far, that we might only get to the red trend line and the 100-period moving average, the black line here. Notice that the 50-period moving average, this red one, is holding us up. We'd have to get through there, maybe down to there. I think that's at least very likely, move down to the 100 and that trend line. And currently that's at 3,800. We're trading at 4,065 right now. So that's a long way down, even just that what looks like a fairly small move. However, I think we could get much further back down to the breakout triangle. That is a massive, 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 huge breakout triangle. We have not returned to it or retested it. And gold in its nature is likely to now be stymied, stumbling along, a little bit floppy, a little bit weak for the next 1, 2, 3, or 4 months. And in that time, we might either go sideways and perform a PIT, pull back in time. In other words, we just allow time to let the moving averages and trend lines and liquidity and everything catch up with us and stabilize at a higher level, or we actually pull back in price, a PIP, a PIP, and move back down to either the red line or the original breakout rising ascending triangle in the center of your screen. So I'm short on gold, but I'm not convinced. And therefore, I've also taken a long position on silver as a hedge against my short gold. I like to be in these markets, but right now I'm not convinced that we're moving down. Right this minute on gold, we may have to move up to that trend line, to the underside. So I've hedged it with a long position on silver. One of them will work out, one won't. When the one that doesn't work out, I'll reverse it or hedge it and go along with the one that's working out. Pretty simple strategy. We've done this now. This is the 9th time that I've hedged my gold positions with silver. And every single time, the previous 8 times, we've profited on both the gold and the short, both the gold trade and the silver trade, even though they've been in opposite my trade has been in opposite directions at the same time. The markets have moved in our favor, doing slightly different things. I'm also short on copper. That's bounced off its 50 period, almost textbook-like. There's the 50, touched it, bounced. And copper, the fact that it's bouncing is good news if you're a bull in general for stock markets and crypto and everything else. The moment copper collapses and crashes, and you can see it's tried a few times, been very wavery, very toppy, very fidgety, hesitant, weird over here. Not to say all of this stuff before with tariffs and wars and everything else going on, and OPEC involved, and the Russians involved. And we've traded this most beautifully. We've been short and long. We've caught every one of these swings. I got the top there, sold the top, bought the bottom, sold the top, bought the bottom, and now we're selling the top here again on copper. I don't know if it's going to work out for the 3rd time or 4th time or 5th time, whatever we've traded here. I've got 2 potential arrows. One's going down, I think it's the most likely. One's going up. They may go along with whatever gold and silver does, or it might trade completely opposite to gold and silver. This might move down. If we see risk increasing, copper could collapse. The stock markets could collapse. The dollar could collapse, and copper could collapse as a warning in advance of that. And gold and silver could go to the moon, through the roof, as panic sets in. Swiss franc could go to the moon. So I don't know. I think I'm watching copper very closely because it will show us what's about to happen next. And I think it's going down. And it's kind of a hedge in a way, because I'm very long on other assets. So, if those move up and copper moves down, or they move up and copper moves up, it doesn't really matter. I've got the sort of hedges in place to make this play. Very tricky trading, folks, currently. Very volatile, very difficult. And but don't be scared of volatility. Without volatility, we cannot make money in these markets. Michael Saylor, whether you like him or not, famously says this, that volatility is the lifeblood of the markets. Without volatility, no one makes money. And we want volatility. And when it comes along, we all say, it's too volatile, it's too dangerous, it's too difficult. And we get scared of it. Don't be scared of volatility. Manage it. Keep your risk as tight as possible and let the runners run, because the runners will make you loads of cash if you get in at the right time. And of course, in the right direction. So that's that. I want to talk quickly about the ZAR. This is the South African Rand against the US dollar. Loads of news. We talked about this last week in the stream about the fact that there's oil, there's rare earth, there's stuff going on with this gold, platinum, uranium, lithium, plutonium, all going up in price, all coming out of the ground in South Africa, and now big oil and natural gas reserves and rare earth stuff going on, and probably Chinese and Iranian and US interest in the whole lot of it. So so that's been driving the Rand stronger. This chart moving down means that the dollar has been weakening against the South African Rand, or rather put it the other way, the Rand has been strengthening against various other currencies, including the dollar. But we've now reached this critical level, double bottom within a double bottom, and we've bounced out after faking out that double bottom about a week and a half ago, performed a reversal with a double bottom, one down, one up reversal two candle reversal pattern, and we've moved up through the 50 and the 20 period moving averages, so far rejecting at the 100 and that tweezer top, but it looks like it's moving up. Target for this one's right back at the top at about 20 rands to the dollar. We've spoken about this one a lot, many times. I live here and I've been trading this currency pair and spending it, living with it. It's my fiat currency. And I've traveled overseas with it and converted it into other currencies many, many times. And just to regale you the final story on that, in the 70s or so, when I was a young kid really, I could buy, I think, roughly £1 British or $1 for 1 South African rand. And right now it's closer to 20 South African rands to purchase a dollar. So that's, currency devaluation in its extreme. And our neighbors have, in Zimbabwe, have devalued by millions of percent. All right, now let's go back to Bitcoin and see how I'm playing this today. It's super interesting. I want to have a look at let's have a look at the week chart. I'm going to finish off with this, folks. Super interesting. This is the week chart on Bitcoin. The first key level that you need to consider and first target for Bitcoin, it's now a target, right? I'm long on Bitcoin, but there is a target on Bitcoin's head, and the target is written or reading on its forehead $74,500 US. We're currently trading at 84, or it's 86 now. We moved up a little bit. Yay. So, another $10,000 down below us. That's the breakout point. But we've already had the retest. There's the breakout. There's the retest. Perfect. This is a weekly chart, and we've bounced up now, and people are saying we need to do another retest. We don't have to do another retest. We don't have to. We might need to, but we don't have to. Rather, let me change that. We might think it's a probability or a strong possibility, but we don't need to because we've done it already. But what we have done is we tagged the 786 Fibonacci reversal and the 100-week moving average and bounced emphatically out of that over the weekend, starting on Friday. I have my tiny long position up at the top of last week's candle, but I'm looking to add some more. I think, and I'm not the only one who thinks this, as all the crypto bulls on YouTube have turned bearish, as they will do, because they sell more clicks by turning bearish, believe it or not. They like it when the market's going down. And they've turned bearish, but not all of them. And I have not turned bearish. And I think that this weekend may have been turnaround weekend. And it is November, and we've still got weeks and weeks to go before early January. There's plenty of time for this market to catch up. Liquidity has been rallying and rising, global liquidity. Stock markets, everything has moved up with it. Commodity prices, gold, stock markets, except crypto has gone exactly the opposite way. Bitcoin and crypto, we've seen no altcoin season. There's been perpetual selling by whales and potentially computerized scheduled selling. There's been all of this stuff with Michael Saylor and strategy, and it's all over for Bitcoin. It's all over for strategy, and they're going to be locked out, and they can't have all the Bitcoin. They're going to have to get rid of it. In the midst of all of this negativity, the most extreme negativity, and in the midst of a fear and greed index on both Bitcoin and the stock markets being at all-time lows, look at what Bitcoin did on the weekend. Bounced out of there. Let's look at the day chart. You might not be convinced, but I've looked at charts long enough myself to know that this is a level that is trying to hold and is desperately working hard. I wouldn't say, I don't want to use the word desperately clinging on, because I think it's more than that. I think it's aggressively buying this dip. The channel bottom, the 100 period moving average on the week chart, this horizontal line at the 78.6% Fibonacci. We're above all of that now. We're back above it. And it all happened on the weekend. Now, the problem is, will we have a CME gap? And we need to go and have a look at the CME chart, the Bitcoin futures, and see where we closed on Friday, because we will have to, if we have gapped up over the weekend, we'll have to close that gap. So don't be buying your Bitcoin at the top the moment you can like now or in an hour's time when the market opens, and you'll see the NASDAQ rallying. I think so. I think this is what's going to happen. You're going to see NASDAQ, S&P, everything moving up in pre-market as the market opens. Maybe not natural gas. I hope natural gas moves down. But Bitcoin is signaling that's what's going to happen. And all on the weekend, when all of the crypto dudes and dudesses, there aren't many dudesses, dudes on YouTube are saying we're going down to 74. We have to. We've got to retest that level, even though it's been retested already. This is the futures chart, not the one I showed you just now. Retested already, bounced out. Come to the last chance Fibonacci, 100 period moving average on the week chart. Could not be better, honestly. And also, if we look at this, all of this stuff below the current price, below the black line that we're currently trading at where the 100 is, all of these were just wicks. There's no massive volume. Okay, there's a little bit on that one candle there, but these are wicks. One candle, only one candle has closed beneath that level so far. And this candle, this is a weekly chart on the CME, has not closed below that level. Let's go back to, if I can find it, Black Bull. I can never remember if it's Bitcoin or BTC that I've got to call up. And I don't have my charts active at the moment. And I really want to go back to that chart. So here we are, back to the Black Bull weekly chart. Also notice that we've got this channel that we're trading with, have been trading within. It's not the best channel. It's just, it's too steep. It's not really a channel, but it's interesting. Notice the wicks below that level. Now let's look at the day chart. Look how we bounced out of there. Look at the wicks. Look at that big wick. That was Friday, right? Massive move up late on Friday after hours, bouncing out of the 786. Let's go to the 4-hour chart. Let's start zooming in. What's happening currently right now? There's the bounce out on Friday. We've not looked back. We tried to get down. I knew that we were going to hold here, by the way, because on late on Friday, I've been trading. I took 1,000 trades between Wednesday and today. 1,000 trades on just hedging, unhedging, protecting my Bitcoin at these levels, just hoping for us to move out, so that because I don't want to be stuck, caught down at these levels and not be in the market. I've got FOMO. I've got FOMO. FOMO is good sometimes. It's not always bad. I don't want to be trapped at the bottom with a hedge. I've only got a small position on, so I've got lots to work with, but I don't want to be trapped at the bottom here. And so I took loads of trades, loads and loads and loads of trades. Could have been even more than that, but there we go. Look at how we tried to get up through that level again. This is the crucial level. Let me put a blob there. I've got to focus on this, folks, because let me put a blob right there. We tried to get up through there, tried and failed on the weekend, but we only just dropped back down there. And then just a few hours ago, this is midnight, my time, this morning, Sunday morning, in other words, midnight Saturday night, we broke up through that level and we've held it, tried to get back down, held it ever since, and looking strong. Now, the market is not open. The overall markets are not open. Bitcoin's open. I expect that we may have to retest some of these lows down here. And remember, we were talking about that CME gap, which is now, where was that CME gap? Let's just make a note of that. I must make sure that, where was the CME gap? Let's go quickly back to the day chart. Really got to find that. This is the CME. Yeah, weekly. Was that on the weekly chart? A weekly CME gap. I can't remember now. Anyway, maybe not. I think we filled in all the gaps. Anyway, so going back to this, I've got to find my Bitcoin chart now again on Black Bull. We're going to finish off now, folks. For those of you who are trading crypto, this is really important stuff. Here's the 4-hour, the day chart. Look how we bounced up, holding very, very strongly, and on the 4-hour, claiming that level. Now, we might get some more clue about whether this is going to work or not from the alts. Look at ETH moving up beautifully. We've got long, very, very low down on ETH, XRP, and Sol. We bought all of these almost at the bottoms on Friday. So happy days. Let's hope they keep on moving. And I've also got names like ADA, Uni, Litecoin, and Link, and then a whole bunch of other minor coins, and even, I think, I don't know, fart coin maybe. I don't know. Probably not. I'm joking. So I think this is looking fantastic, folks. And then let's zoom in even further quickly just to finish this off. I know we're not even going to get to questions today. We're over time already. Look at the 1 hour chart. There's that area that we tried. That was the key decision moment right there. So I guess if we put a volume profile on the right-hand side, there's going to be serious action in here. We could put a volume profile at the bottom, actually. Let's do that. We should see something from this too. And let's see how much volume came in at that point over here. Look at the volume increase in this. Okay, it's not that dramatic. I'm trying to make things up now. No volume increase. Nothing really that exciting. So that's that, folks. Now I must go back to the stream and finish off. It's just been way too long again. And as I said, what I'm going to be doing going forward is making separate videos during the week for natural gas, and then tech videos, and then the live stream on Sunday. So there'll be 3 videos every week from me and 3 videos from Paul on crypto, altcoins, Bitcoin. Fantastic videos. They've been well received. And if you're into crypto, don't listen to me. Paul's the guy to listen to, and he'll be with us 3 times a week too. So check out the schedule, check out what we're up to. Come and join us in the private group. I'm going to get to some of the questions right now, and I won't be able to get through them, but I'll say hello to you. And in the sessions that follow, we'll have much more time to chat. But I wanted to get through some of the stuff. Learn to earn. James, you're a charming dude. Thank you, Learn to Earn. Appreciate that. I like women, okay? Just letting you know. I'm joking. I appreciate your comment very much. All right, now, folks, I can't get to the questions. I'm sorry. I could start from the last question. Let's start Fartcoin. Yeah, Fartcoin. ADA. Yeah, I'm long on ADA. Okay, let's have a quick look at ADA while I'm here. All of these will probably follow suit with Bitcoin. The most important thing is that we get Bitcoin moving, and the rest will follow suit. This is not looking good, but all of these have dribbled off and bled off horribly. And just all the altcoins have just come back down to basically their lows. You can't get much cheaper than this on ADA. I think it's a decent coin. I've got some on this too. I'm about 50% down on my ADA. I think I got in at about, I don't know, 70 cents. We're at 35 or 40 cents right now. So not good, but I don't have big positions on any of these. My main play or trade is always Bitcoin. That's just the way I am. It might be that I picked the wrong horse. Who knows? Looking for URA. Okay, all right, Keith. Thank you, Sean. Very nice triangle on gold. Sure, yeah, I spotted that triangle, Damajan. Contract size. How many contracts per your 100% position? I don't tell you what my position sizes are, too sharp. That's not your business. Learn to earn any price movement on natural gas last year and this year. Yeah, we can do that. We'll be doing a special natural gas video during the week. I'm not sure which day. I think it's going to be Wednesday, but it might be tomorrow, actually, Monday. So just make sure you're subscribed and click the notification bell, because either tomorrow or Wednesday, we'll be doing a special natural gas video. I don't want you to miss that. Big person discovery on my person. Big discovery of the year where currencies on the 1 hour. Yeah, one hour charts. Exactly. Yeah, stay away from the 5-minute charts unless you're a day trader. Have we covered gold? Yes, we covered gold quite in detail. Lockdown, up or lockdown, natural gas. We talked about natural gas. Natural gas, up or down? Down. So you're South African signing in there. Here to stay. Lovely, lucky. Hello, hello, hedgehog. Yeah, I put my hedgehog name on the screen there. That's cool. That's the one. Thank you very much. MSCI. Thank you, Kiran. I couldn't remember it. I spent too much of the day on the beach. I probably got a mild form of sunstroke. Yeah, MSCI index. That's it. There is a threat that MSCI will be removed from the MSCI index, which is very, very bad news for MSCI and possibly crypto as well. I don't think it's as bad as it sounds. We've had all sorts of people saying that crypto is doomed because of this, because of that, because of everything else. Every one of them so far has turned out to be a bit of a damp squib and not as serious as initially thought. Double bottom in Dixie, no clue, mate. I don't know about Dixie. I think it could go either way. Beep, bop. Stop spamming. Yeah, stop spamming. That wasn't me. That was Nightbot. That was Nightbot, Kieran. I didn't say that. I didn't say that. I've sent you an email. Thank you. Oh, okay, sorted. Thank you, Emily Trading, for helping out. Hedgehog Master. Yeah. Hedgehog gold, short term, next move. So down, short term, I don't know, Damajan. We've talked about gold. I think overall up a bit maybe, and then down, and then back up again. Thank you. All right, folks, I've got to get out of here. I'm sure you do too. It's been great talking, and we will have a lot more time in these streams, and I'd love to get to more of your questions. And in fact, what I'm going to probably do next Sunday when we do our live stream is to just just answer your questions. So maybe do a 10-15 minute overall summary, and then I'll get to your questions, ask your questions, and then we can just do that instead. So that's what I think we could do. But it's certainly just a lot to get through. All right, folks, well, have a great evening, and I'm sure everyone's draining out of the room. It's been wonderful to see you all. Make sure to join Crypto Paul. We call him Crypto Paul. He's our Paul at ArcisFX. He's got some fantastic insights. Folks, if you're not au fait, if you're not comfortable, if you're not clued up, if you're not skilled in crypto trading, and you want to be catching what I think is the start of a massive bull run, it's what I think. I'm not predicting it. I'm not betting on it, although I am, but in a controlled and safe manner. I'm betting on it, sure, but I'm not predicting it. But I do believe it's going to happen, and I think it's likely to happen. And Crypto Paul might not agree with me. That's fine. We don't have to agree on everything. But if you'd like to know what both of our views are, make sure to join the private group. You will lose money if you don't know how to trade crypto and you want to leap into it. And I'm sure a lot of people, although the retail market is not very interested in crypto right now. So come and join us, or at the very least, subscribe and click the join button on this channel. It's like $1 or $2, and you get our every single week, weekly members video on a Wednesday, exclusive to members. And it'll cost you $1 or $2. That's it. Folks, have a lovely evening, and I will see you in Monday's video tomorrow. And I think we'll probably put a schedule up somewhere, somehow, so that you'll know what it is. Take care. Good luck. Be safe. And make sure that you get in on the crypto train if you think that's what is going to happen. I do. Have a great Sunday evening.